What's going on, everybody? Thank you for being here on this. What do we even call this? Looking outside the window, everything looks gray and white. Matt, is it snowing in Texas?
Not where I'm at. It's definitely underwhelming. I was expecting the world to collapse. It's yet to. Snowpocalypse 2026, Houston, Texas, we will rebuild.
So underwhelming for Matt, freezing for me, hence the hoodie. I would say we've probably got like 7 inches already.
And how much longer?
I don't know. It seems like it's slowing down, but it's supposed to snow throughout the night. So who knows?
Well, I'm upset because I was going to bet on Kalshi and I never did.
You know, you got to stop with that.
I haven't. I was like, what am I going to bet on? And I haven't bet on Kalshi in quite some time. And I was like, is this what I'm hanging my hat on? And it was like, is it going to snow more than 12 inches in New York between the 24th and the 26th? And I was like, well, I don't know. Is it?
Listen, you go against the weather industry because it is the greatest job in America. You never have to be right. Everybody expects you to be wrong. I mean, is that not the greatest expectations you could ever ask for?
Well, I'm always wrong, Steve. But I try my best.
On that note, please read the disclaimer. We are not financial advisors because we are always wrong. And do your own due diligence. This is for educational and entertainment purposes only. Everything we say are our own opinions. Thank you very much. So before we get into the small account challenge, I got some beef.
That you're still wrong about the SP 500?
Well, that too. I think that could change this week. I think we could get a breakout this week. But I got some beef.
That's not me.
It's my phone. It's somebody that's very important saying rocket with a rocket ship.
Is it the shadow government?
It's the shadow government.
I knew it.
I got some beef.
What's the beef, Steve?
You know,
I'm watching because I haven't eaten yet and I'm hungry.
I'm watching the UFC event last night on Paramount. And then in the press conference, because I like watching Dana White's press conferences after, people are getting on about running ads during the thing. It's like, so you mean to tell me you would rather, when they're in the corner, not see them catching their breath rather than paying $79.99 an event? He can't please anyone. It's crazy.
Can't do it.
I mean, for $12.99 a month, you get all the great content on Paramount plus every UFC event now instead of having to deal with the pay-per-view. I mean, come on.
Pay-per-view was always a nightmare. I've only done it a handful of times, and it was like you'd order it. Sometimes it would show up, and then you'd have to call back, and you know what I mean. Like, maybe I'm thinking about the '90s, but Jesus Christ, it was always a pain in the ass.
Well, and now it was with ESPN, and it was always annoying trying to figure out how to order. It's just freaking annoying. So, anyway, we have some business to get to, and thank you everybody for being here. Truly appreciate it. Matt, where are you on the small account challenge?
Where are you, Steve?
You want me to go first, I guess.
Yeah.
Well,
where are you? And I'm so sorry. We're going to get demonetized, Steve.
Oh, my God. They're going to think you're the real deal. My portfolio is up 3.25% is where I am at. And I will show you what I have done. So I have generated $366.36 in income from options. And I am up $324.75 on the portfolio. I have BMNR cash secured puts, that's 54% of the portfolio. Zeta cash secured puts, 20% of the portfolio. Still 23% cash. And I have been buying with the premiums from the options. 3 shares of QQQI, which I'm expecting will generate $22.32 in dividends
22.
next year. And I have added 5 shares of PDI, PIMCO's Dynamic Income Fund, which I'm projecting will produce $13.25 in dividend income. In total, $35.57 in dividend income throughout the year. And I purchased a SoFi February 6th naked call for $84.66. It is down 50% right now, which fully thought that was going to happen. But SoFi earnings on Friday. If they pump, this will pay out. And if not, somebody else paid for it. So that's where I'm at, Matt. I'm up 3.25%. I have a little bit of liquidity that I can play with. We may take a position tomorrow in Meta heading into earnings or NVIDIA. I'm not sure yet. We're going to do something. I got to deploy the rest of the cash. So this is where I'm at.
What kind of profits did you take on the when you closed out the Bitmine and the Zeta? Was it like 40% profit, 50%?
What do you mean?
Well, you generate an initial premium,
right?
And then you give it back.
How did I give it back? I rolled it at 356, I think, on Friday.
Got it.
So I just put down whatever I generated from the net.
The previous.
Yeah, so I bought them back for like a penny, I think, a contract or something like that.
Oh, you think you're better than me because they would have expired worthless, Steve?
No, I just would rather do that and get the freaking additional premium from over the weekend than writing the contracts on Monday, because you get a better price on Friday.
Say it again, Steve, because I don't think people are hearing the great move that you just put down there.
I don't know if it's a great move because crypto's dumping right now.
Well,
I
didn't want to say that, but
I'll say it.
But no, what Steve is saying is you already have like a 95% plus profit. You can't make much more. Close it out, re-roll for the following week or whenever, so that you have 100% of it going on. You have 3 free days, 3 free days of additional theta decay. And when it opens up on Monday, you're likely to have a large gap down on the value of the option, which if you're selling options, that's a good thing, because you already have a couple more days closer to the expiry date. So that theta decay kind of occurs over the weekend.
So Matty, where are you at is the question.
Share your good old screen, Steve.
Do you want me to share, Matt?
What do you mean?
I mean, there's nothing for me to... Oh, you mean you have it on my sheet?
Yeah. Come on, Steve.
Listen, you're making things easy. I just go to the Matt tab. Okay.
Look at these graphics. You don't even know.
Okay, explain.
Sure. So yeah, well, I mean, this is kind of fugazi a little bit because while I'm up 12.2%, a lot of that is just premiums that I've generated, and some of them are out for quite some time. But I created some graphics so that people can follow along how much better I am, and then Steve. So it has a little what we like to call in the biz as a waterfall plot in the upper left-hand corner that kind of shows you what your initial investment is, and then you have your different categories to show how I'm doing in that respect. And the third and fourth columns, which is options purchase, the options value, if you take the difference between the two, it'll show you how I'm doing on those. So obviously in that particular category of long options, I'm not doing well. So if you scroll down, you'll see that the TQQQ is hemorrhaging cash. It's down by about 38%, just like Steve said his
Look
SoFi's
at you
were down
getting
50%.
fancy. Look at you putting spark lines in.
Steve, some might say that I've done this before.
Okay.
This isn't my first rodeo, and
Yeah.
I'm here to not just win the battle as I have
Ooh.
done today, but I'm here to win the war.
I mean, questionable because you have a lot more time on your options that you wrote.
A win's a win, Steve.
Okay.
But no, Steve is right. I mean, I took advantage of seeing something that I want to potentially invest in long term, not just in this small portfolio, but also potentially in my bigger portfolio. And it is a riskier opportunity, and I've talked about it in the past. It's called Skywater Technology. So I took a 6-month put option on that. I believe it was two options. I believe. So about $26 strike price. I wrote 2 of them, so I captured about $500 a piece, a little bit more than that, and pocketed because there's 2 contracts over $1,000. But that means it's open for 6 months, so I have that $5,200, so about half the portfolio value locked up in that. And so there's that, and then I also did a little quick boy for the 30th for SoFi. So $24 put. That might not be good if it gaps down, but I don't mind holding it and then running covered calls on the opposite direction. So so there's that piece. Still no equity positions. So at the moment, if you just scroll up, I think I copied what you've done, which is showing the amount of value that the portfolios is in those particular opportunities. So if you scroll to the top, Mr. Fiorillo.
I don't even know what to say, Matt.
Did you even listen? Do you need to scroll up? I need to show people the allocate. There you go. Thank you. Much appreciated.
I'm just saying, I was looking at your positions. I don't even know what to say. The fact that you went out 6 months and the fact that you would question if I'm even listening is ridiculous.
Steven.
I'm analyzing your play going out 6 months on Skywater.
What's so crazy about it, Steve?
Nothing. I'm just analyzing.
You just saying, and you pulling a. You think it's a bold move, Cotton?
I don't know.
So we have the serve cash secured put there. That's still up and running. We have the large amount of value being taken up by Sky T with the cash secured put there. The SoFi money kind of allocated there. The TQQQ hemorrhaging cash 4%, and then we still have a little bit of cash kind of left over. I need to actually incorporate that how much actual cash I have left over. But it's doing good. So at the moment, the value is at 11.2. So unfortunately, I'm down $281 on my long option, but at the same time, I've generated a good amount of premium. But as Steve noted, it's because I went out 6 months at a time.
Went out 6 months, and I'm going week by week. All right, so Maddie, what are you doing this week? You have a little bit of capital left. What are you thinking about?
I don't have any capital.
Do
I?
You have a little bit of capital, right? You have 6.8% cash.
I mean, it's not a lot.
You could still do something with it.
What would I do? WWSD. What would Steve do? I'm trying to think what you would do and do the opposite, because obviously you're losing.
Oh,
too much.
I mean, I don't know if you can necessarily say that I'm losing at the moment, because right now you have 20%. Oh, I'm sorry, 46.4% of everything tied up until July 17th. So, I mean, there's a lot of work I can get done in the next 6 months.
There is, Steve. You're not wrong.
A lot of work I can get done.
But Steve, let the people know. Do I have to hold it all 6 months?
Never said you did. All I'm saying is right now, your capital is tied to that for the next 6 months.
Oh,
Unless
people
you
are saying
buy
I should be the one taking notes, Steve. That's what the people in the chat are saying. I should be taking the notes.
Huh.
They're saying Steve's getting that turnover.
Well, hopefully I made a good move with BMNR. Hopefully I have a 28, I believe, strike. Let me go look. I'm at 28 strike on the cash secured put.
People saying I'm done, Steve. They say the challenge is already over.
I don't know. I wouldn't go that far. I would not go that far. I would feel very, I don't know. I wouldn't go out that far. That's just me. I'm trying to work this week by week.
You're not wrong, Steve.
Oh, I'm often wrong, Matt.
Oh, BMNR is under 20 bones.
Under 20?
Is that real?
No, it can't be.
People in the chat lying. Then they wonder why we don't trust the chat.
No bueno is what it is. So I can tell
it's
you.
It's not under 20. It's 28.63. Why people lying? That's why people don't trust the chat.
Yeah, but Ethereum's down quite a bit right now, so it could open up tonight down a lot. I mean, let me go on the hood. Ethereum's getting crushed, 2802.
What did I say, Steve? What did I say last week?
You did.
What did I say?
You said, don't stop believing. That Matt is always right.
No, I said I honestly think that that last failed attempt in the pump over the last 2 weeks was the last fizzle out, and then I think that we are now in the midst of the beginning of crypto winter.
The beginning of crypto winter, he says.
You remember me saying that, Steve?
I remember you saying it. I didn't want to believe it. How about that? So we're at the beginning, not even the end, the beginning of crypto winter.
The end? The fact that people even would think that we're getting close to the end of a crypto winter means that they have no idea what the fuck they're talking about.
You mean we're not close to the end?
Jesus Christ.
So I shouldn't buy more Ethereum here?
Well, my thought process on that is when you have capital, sometimes it's better just to deploy the capital. But I'm cautiously confident that we will see. Yeah, people are always saying the 4-year cycle is dead, blah, 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 blah. It's like, well, if the 4-year cycle is dead, why did we retrace on Bitcoin from 120,000 to where we are today? If it's dead, come on. What's more realistic?
I mean, that looks like it's just going sideways to me now. No?
You might be right. Maybe we're at the bottom, but I'm
saying, it looks like for the past couple of months we're going sideways.
I feel like there's going to be a much harsher event. There's generally speaking something where people are literally thinking crypto is going to zero, and we have yet to see something like that. So I feel like in the next 6 months you will see something that people will be like, "Oh my God, I can't believe I got completely scammed by Tom Lee. I can't believe that I ever got involved in cryptocurrency at all." People are going to be running for the hills, liquidated, stopped out of all their margin calls, everything like that. And they're going to be like, I'm never touching cryptocurrency again. That is when you want to buy. And that is likely the beginning of where, generally speaking, I'm not an expert, but generally speaking, at that point, it recovers 5-10%. And then it flatlines, hangs out there, oscillates for a good 12 months. And then you start to, and probably likely the beginning of 2027, middle of 2027, you start to see inklings of hope. Towards the third quarter, fourth quarter of 27, you actually start to see some sort of rebounding. But I have no idea what I'm talking about, and the 4-year cycle is dead. So,
All right. I'm hoping that when the next bill gets signed, this turns around. But what do I know?
But I will say that I'm pretty disappointed. I really did think that Bitcoin was not just going to double, that it was going to hopefully triple. I was expecting it to be over 150 to 180,000. Over 250, I thought was a little bit insane. I did see some people calling for 300 plus, and I thought that might have been too aggressive. But to only double from last cycle being like 68, 69,000, to being 120, 125 is pretty disappointing.
Okay. All right, Matt. So that's the small account challenge. Matt is currently in the lead. He has capital locked up longer than me, but I made a little bit of a risky play. We'll see. We need Ethereum to turn around. It's down quite a bit right now.
Who's Ben Cohen?
What?
Who's Ben Cohen?
Ben Cohen?
Yeah, somebody says I follow Ben Cohen. Who's that?
I have no idea.
And I've never been a BM&R bear, right? Just because I don't think that Ethereum is a good place to put your money right now. Doesn't mean I hate the company. Doesn't mean I don't believe in the company. I'm actually still. Excuse me. Thank you. I'm a believer in both MicroStrategy and BM&R, but I just don't think it's the right time.
Okay. So this week we have a Fed meeting. We have Microsoft, Meta, Tesla on Wednesday. We have Apple on Thursday. We have SoFi on Friday. What are you thinking, Matt?
Holy shit, my sister got 15 inches of snow. I really am anticipating, because I still think we're going to see strength throughout a lot of the cloud businesses going in. Apple, I can't really foresee. I still think that they're struggling personally, but yet for some reason their market cap is holding up. I think if anything, they're going to continue to do well just based off an EPS basis, because they keep buying back shares and they have very low capital expenditures. So they're able to just throw that $80 billion a year into buybacks, and that ends up giving a good lift to the stock. So I think that'll play through, and I think their services business is high quality as well. I mean, I'm an Apple user myself, so I get it. In terms of Meta, I think we talked about that the other night. It might have been last night, it might have been Friday, but I think that the One Big Beautiful Bill Act, they obviously took a lot of depreciation in the third quarter, so the fourth quarter I think will show up brilliantly quarter over quarter comparatively. What I'm looking at for them is to make sure that they're building. There's a lot of people that were saying that even though yes, the Big Beautiful Bill Act allowed them to show up poorly, that even still the ops cash perspective, they didn't grow much year over year. So I'm looking at that number comparatively to the fourth quarter of 2024 to ensure that the company's still heading in the right direction. I'm cautiously optimistic. I think 2026 is going to be a banner year. Yes, they might have to have some write-off charges associated with people that they're laying off, obviously for severance and things like that. You have to kind of allocate and pay people out of some of their stock options, etc. So they'll have a short-term windfall with respect to that. But I think the operating cost is going to benefit drastically from that, probably several $1 billion. If you think about tens of thousands of people being removed from the organization, especially in potentially hyper-focusing on Reality Labs, maybe not spending as much capital there and refocusing that more on some of the data center pieces with Reels and things like that is actually cash flowing. So I think there's some efficiencies to be made. So that might show up in their forecast for gross margins, net margins, etc., coupled with just overall growth and the fact that they're potentially planning on spending over 125 billion this year, 2026, meaning in CapEx. I'm sure that that's going to flow through, and if they can prove that what they've had invested in 25 is showing up well, I think the stock will rally, if not stay flat from where it is today. But I'm cautiously optimistic. There's an opportunity, not a guarantee, but an opportunity that it'll be above $700 within the next 6 months or so. Surprised that it even dipped below 700, to be honest, but I wouldn't be surprised if it goes back above 800 by the end of the year. And who was the other one? It was Microsoft as well.
Tesla, Microsoft met on Wednesday.
Microsoft, man, they're just been a complete powerhouse. Their premiums have come down. At one point, they were like a price to earnings of about 40. They're now in the low 30s. I think it warrants at least a 25 to 30 price to earnings is where I see if like they're not even in a growth mode. Now, Microsoft obviously is in a growth mode. So to me, being at a 25% year over year growth rate with Azure, to me, that is a reason why the company can trade north of a 30 times price to earnings multiple. Is it going to get that? It's the largest company in the world, top 3 sort of largest companies in the world. Discount factor, like we're seeing with Nvidia, then maybe you could say that it doesn't warrant that 33 times multiple. But for me, I just think it's a continued to be a great business. My only fear for them in the long term, not this quarter, but in the long term, is that eventually Palantir comes up to play and people start to recognize that while the operating system of Microsoft is great for maybe very simple sort of businesses, more complex businesses that have a lot of data flow and robotics and sensor data, like a lot of engineering companies, utility companies, etc., will likely still utilize Microsoft. Don't get me wrong, but the amount of usage will go down. And so eventually I think that the Office piece of of Microsoft, which eventually would, I think, attack Azure a little bit, obviously not materially right now, but in the long term, I think it's going to lose out to the next generation of operation systems like Palantir. But like I said, that's a long-term time away, and I think Palantir has much long-term to go to demonstrate the easeability of utilizing something like an Office. The user interface for Palantir Foundry is obviously much more complex than picking up a Microsoft Office suite. So for right now, the monopoly is still owned, in my opinion, by Microsoft. Tesla, unless they come out with some real mind-blowing news associated with Optimus, I think that the stock and the margins on the car business have been tough. While they have increased the amount of cars they've sold, I think gone are the days of people predicting, which I haven't heard in a long time, of guaranteed 30% net margins on every car that they've sold, so that easily the company could be worth $10 trillion by now, is what people were forecasting 5-10 years ago. People are now in their reality of, hey, to sell 1 million cars a year, 2 million, 3 million cars a year, you need to have margins less than 8%. Because otherwise people aren't going to buy your cars. So the thing that I believe could be beneficial and a big tailwind for Tesla is the mega packs that they sell. If you think about what could really drive that, is you need kind of remote some of these data centers are being installed in more remote areas, and the power supplies haven't been able to catch up yet. So that could mean that you set up some of these mega cells with solar panels to help supplement maybe some of the grid that isn't allowing them to fully utilize natural gas power or utilize hydropower in particular areas. So I still think that Tesla Energy is doing a really good job in that respect, and I've been surprised by the amount that they're able to sell those mega packs for. So I think that could be a potential tailwind, and especially as Elon continues, as he said in Davos, to lean on solar. I believe that will be a big play for Tesla in years to come. Trying to think if there's anything else, but I think without Optimus, I think it might fall flat. And unless Tesla Energy shows up in a very powerful way, I think it's not going to offset the potential downside that you're seeing from the auto business. But still have plenty of cash. How they deploy that, whether that's through Optimus or if that's through Tesla Energy, I'm curious.
Yeah, so when it comes to Tesla, I think that it's going to be a disappointing quarter by the numbers, and this quarter strictly, I mean, I hate saying this because I love numbers, but it strictly depends on the earnings call. The subsidies for cars are done. Subsidies for energy is done. I think that we're in an environment where Elon needs to play up Optimus, FSD, robotaxis. He needs to get something done sooner than later. And I think that's what really matters at this point. I don't think that there's anything in the earnings that can make this stock go up. I think it's all about presentation on the earnings call. And hopefully for Tesla investors, the ordeal with Optimus happens sooner than later because that's the future of the company. As far as Meta, I still think that's going to be the big winner this week. And I think that we're in a situation where the stock has been beaten up so much. We got a little bit of a rally last week, but one of the things I don't like, it's happened to pretty much all the big companies at one time or another. It definitely happened to Amazon a couple of quarters ago. The headline number caused Meta to fall so hard, and it was all algos. The reality is that on the earnings call, their CFO came on and said, this is a one-time impairment, as you stated, and this will actually be beneficial going forward. So I think the numbers are going to be really good, and I'm very excited for Meta on Wednesday. Out of the three, I'll be following the Meta earnings call more closely, and then I'll be looking at Microsoft and Tesla. So we'll see what happens. We got big week the following week. Following week, we got Palantir, we got Amazon, we got Alphabet. So we're in the crux of it. We also have an FOMC meeting on Wednesday. I don't think we get a rate cut. I think they're going to hold rates. They're going to be optimistically cautious for the tone, my opinion. And then we'll probably get, Trump saying something and people going crazy. So who knows what's going to happen after that FOMC meeting? You have any takes? You think that they're going to keep rates the same?
Rates will be the same. Yeah, I mean, I don't forecast anything. I think the market's still running really hot. I think you've already just start to see. Chris Patel and I had this conversation the other day. I mean, so many different things. Energy's down, grocery prices are down, except for beef. I went to the grocery store yesterday or the day before to stock up for Snowmageddon, and kind of surprised. Like I was like, oh, box of cereal. I was like expecting it. I remember, so things have come down quite a bit, actually, surprisingly. And I don't really look too much at prices often. That sounds kind of maybe I just normally buy what I need to buy and don't really concentrate on it, but I actually was paying attention, and I was very surprised at the amount of things have kind of come down. Chicken's very cheap, like Chris Patel kind of noted to me. It seems like the majority of things have come down pretty much, except for beef, which has continued to go up. So I don't know. Very surprised in that lens, and the thing that I haven't noticed come down, though, is restaurants are still somewhat expensive. So there's that piece that while grocery prices are down, restaurants are still.
What are you paying for gas down there?
$2.20. Maybe.
So I paid $2.98 the other day. That is cheap as hell for here. Yep. Cheap as hell. I mean, and here's something I get annoyed about. Why don't we just call balls and strikes instead of cherry picking and condemning? I mean, the reality is gas is significantly cheaper than what it was.
Yeah.
Period. There's hard data to support that.
Yeah.
And it's crazy. I mean, I can't believe I was paying under $3.
Shout out to Hot Kev watching on Twitch. But yeah, California is still over $4 a gallon, and people get upset. They're like, what do you mean it's less than $2 a gallon in some states? It's like, well, if it's not, likely due to the fact of the taxes that are in your state. And that's not necessarily something that the oil and gas companies can control. Margins for refineries are still at decently lows. They're not at 25-year highs or anything like that. And the fact of the matter is oil's below $60 a barrel. So I don't know what to tell people. It's cheap, and that has a follow-on effect for a lot of other items as well.
Look, it is one of the largest input costs. And when the price per barrel is down, gasoline traditionally comes down. Not only are input costs of manufacturing down, so are transportation costs. And that helps bring inflation down. And I think that that's something that people glance over or just don't want to discuss. Like there's several things that go into these headline numbers. And I don't know. It's amazing that we're not calling balls and strikes like this. We are in a very good macroeconomic setup right now. And one of the things I was discussing the other day was that I do think we're going to have a good 2026. And I think we're going to get earnings expansion because we have rates coming down. Even if they don't move over the next couple of months, they're going to keep coming down the second half of the year. So we don't know exactly when we'll get more cuts, but they will come down. You have oil hovering between 55 and 65, which is a good sweet spot. So if the cost of capital is coming down and input costs are coming down and inflation is coming down, GDP traditionally expands in those areas. And Lutnick's out there talking about 5% GDP growth in Q1. That's a setup for corporate earnings to expand. So I don't know why people would be scared of this market. I really don't.
No, I mean, the thing that maybe scares me slightly is I think the market is so hot that you might actually end up with an opposite effect. Like why, unless you have somebody that is truly handpicked by Trump and follows through with it to cut rates, because obviously that gets the economy booming again. My fear is that if you kind of have the same sort of feel in the Fed as you have over the past few years, that if the economy keeps going the way that it is, costs going the opposite direction, etc. I don't know. I mean, things are so hot in terms of everything, and inflation's so down. I don't know. It's definitely interesting.
It's a recipe
I don't know.
for expansion.
It is, but I feel like something we haven't yet. I'm surprised at how well things have gone. There's been some hiccups, and a lot of it's due to the fact of like tariff news here or there. But overall, just very interesting for the economy to have performed so well with slight hiccups with respect to in 23 and in 22 associated with smaller banks, but really we've been able to land it, which they wanted to do with the soft landing pretty well, in my opinion. And so I just feel like that there's another foot to drop somewhere. What it is, I don't know. Maybe that's my contrarian sort of be cautious, sort of thing. But like you stated, I think in the long term, 10 years down the road, this is a great market setup for continued expansion in capex. And the thing that's nice, and the thing that I think might actually be the problem, Steve, is take Verizon for example. There's still some things with Verizon that can roll over and are still less than say 5% that they might have to roll at a 4 or 5% rate going forward. So I still think that there's some companies out there that have been very debt intensive because of cheap debt that now they're starting to still have to roll. And I can't pinpoint a lot of them. I know that Verizon's one that I've seen. I know that Carnival was one that I was kind of peculiar about, but Carnival is a different story because in 2020 they were having to pay north of 10% because of the pandemic, and people didn't think that they had the liquidity. So the companies that did well and had low issues associated with liquidity back in 2020 were able to refinance and get all their debt down to less than 3%, less than 4%. We have some of these other companies that might have some of those that have yet to actually refinance them all. And so what could happen is it gets slightly worse for some of those companies before it gets better. I don't know, and I haven't pinpointed which ones, but I think there's a high likelihood that there's a lot of companies out there that are still like that. Companies that took on way more debt than they needed to be able to expand the early 2000s, where the wave is yet to come. SL Green, I think, is probably potentially one of these as well, where they were able to get cheaper maybe not in the 2020s because obviously liquidity issues, but before, when we still had rather low zero interest rate policies going on, where they're able to get mortgages at very, very low rates, and they have yet to refinance all these loans to the higher rates. And so, and I think that that's partly the reason why they have been selling off some of their buildings to make sure that when these liquidity events do happen, that they're able to kind of power through. So yeah, I would like to do a little bit more research, but I think that there's something said about that. And Verizon's an obvious one because we've looked at it so much. But I'd be curious to see if you look into the depths of some of these other companies, that also would be true for them as well.
Yeah, I mean, Verizon has a lot of debt. Their business is very capital intensive, especially with the C-band that they have to purchase. They're also generating 50 billion of EBITDA, so it's really not an issue for them. I mean, as we looked at their net debt to EBITDA ratio being around 2.6 times, that's just not large. So I'm a fan of Verizon here, and I do think the economy is going to do very well. I think that we're in a good setup. I'm just hoping no black swan event comes out now. I think earnings season is going to be really good. We had the banks do very well, and we haven't had a lot of big misses yet. If the Mag 7 does well, I think that this is a stock market that's relatively inexpensive, which is much different than what other people think. But at 28, 29 times earnings, I don't think that this is a market that's expensive. This isn't 40 times. And it's also a much different market than it's ever been. This is not a market that's made up of industrials. This is a tech-heavy market. Tech-heavy market's going to get a bigger valuation. And when you look at the largest companies in the market, they're not trading at crazy valuations for the amount of profitability that they generate. So let's see what happens. We also have the unknown with how much margins expand from AI and robotics, which can benefit some companies more than others. I do think Amazon is going to be the largest beneficiary out of that. And Amazon is a company that over the next several years can do very well. So we'll see what happens. I mean, this is going to be very interesting.
I mean, I'm curious to see. I mean, I know crypto is a very small part of the market, but as we see a slowdown, people are not investing as much because they get scared and stopped out, and the issues and liquidity events on a retail side. I'm very curious to see, how that actually impacts. I mean, it'll impact like Tesla, for example. If that drops, by $20,000, they're gonna have to write their Bitcoin down because now it's a kind of a net income issue. So you might have some companies like out there, like Coinbase and others, that are very crypto intensive. MicroStrategy as well, but I think MicroStrategy is kind of isolated in the fact that they don't have a large stake in, say, the S&P 500. But
yeah, but crypto doesn't matter for the stock market. It really doesn't. These crypto projects don't produce earnings. They're not reporting. Crypto could go away. It's not going to matter for the market.
It does matter for retail.
I mean, for sentiment, maybe, but most of retail is forced buyers of the stock market, not of crypto. Most of retail has, I would argue, most of their capital in their retirement accounts, not in tax accounts. And you're not buying crypto in retirement accounts.
Mm-hmm. You don't think that people will be fearful if companies like Robinhood, companies like Coinbase, and many others, if the events and volume of trade actually continues to go down, you don't think that is going to really spook people? I mean, just look at what's been happening with BM&R and people being scared with that. We haven't even hit a deep crypto winter yet. If it gets really cold, people are, not from an actual temperature perspective, but from a value perspective, and it continuing to decrease into the below $2,000 a token.
Does crypto trading on a decline impact JP Morgan, Bank of America, Citigroup, or Wells?
It has probably more than you think. Maybe not those particular companies, but I'm thinking
Right.
BlackRock.
No,
Black,
I get it, but here's the big thing. Robinhood is a different demographic of people investing in that. It's more of a retail facing stock. The reality is crypto going down or crypto not having high trading volumes will impact some companies in the market. It will only impact a few. It's not going to impact the big banks. It's going to impact retail companies or companies that are very focused in the retail sector. Robinhood, Coinbase, as you mentioned, JP Morgan's not going to feel that. Bank of America is not going to feel that.
I think that there's a trickle-on effect more than you're giving credit to, where if people don't feel affluent because their crypto isn't going to the moon, fart coin's not doubling or tripling overnight, they have less entire money to spend.
Yeah, but how many
And
people are actually buying crypto? I mean, really think about that. Like, I can tell you that every out of the people I know, like, it's probably very minimal that are buying crypto. And once again, if you're putting in for retirement, you're saving for retirement, and that money's coming off the top, 0% is going in crypto. It's all going to target date funds, S&P funds, total market funds, target date funds. I mean, there's not crypto options in a lot of 401k plans. So I think that this whole idea of focusing on just retail heavy stuff as an indication of the overall market isn't a true indication of the overall market and economy. And it just goes back to when you get a 10% sell off or 5% sell off and high beta names go down 40, 50% and people freak out. It's like, yeah, no shit. Like, no shit, it's going down that much. Like, what did you expect? You're investing in a company that has no earnings. You're investing in a company that's pre-revenue. I
but
mean,
I hear what you're saying, Steve, but I think that this has follow-on effects into things that aren't even related to potentially cryptocurrency. Think like a lot of these other speculative names, they all run together, right? If you're having a huge decline on some of these, the IRENs of the world, that's going to feed into the Oklos of the world and the semiconductors and maybe some of these other precious, it means the speculative nature of what's going on in the market right now can also take an impact. And that, I think, has total impact of the sentiment across the entirety of the market. So premiums overall across the entirety of the market, if some of this stuff happens, goes down. So that could mean that the valuations on some of these companies gets cut by 10, 15%. And that obviously has an impact on the overall market. So I don't know. That's just how I'm kind of taking it. Maybe it comes to fruition, maybe it doesn't.
yeah,
It's more of a hypothetical than like I'm saying it'll happen. I mean, I'm just being cautious that generally speaking, it has a negative impact.
yeah, listen, it could. I don't think it matters for the market as much as some may. I just don't think as many people are investing in crypto. And look, obviously, we want crypto to do well just from a fundamental standpoint because it does help sentiment, it does help the narrative, it does help the story. But to me, Bitcoin's Bitcoin. It's going to do what it's going to do. It doesn't impact these other companies. But we'll
Then
see.
why? And I'm not trying to, I think your opinion is valid. It could just be completely isolated to one sector. But I go back to what happened in 2022, and a lot of that stuff coincided together, right? Bitcoin crashed, Ethereum crashed, all these things crashed. And what happened? A lot of these speculative names also crashed, and it didn't have anything to do with cryptocurrency. So maybe the bubble just, the excess liquidity and people being afraid that interest rates were going to go up was really the cause of a lot of that. Or maybe it was the fact that everyone realized that crypto was, the lead that took into effect and it dragged the rest of the market down. Maybe it's a combination of multiple things, and I think it is. But it's not to say that it's not going to have a cascading effect. I think it's generally speaking going to happen. And it'll drag more than just crypto down with it if crypto gets cut in half.
Well, think about what happened in 22. You had the Russia-Ukraine war. You had, which destroyed the markets for a good month. You had a rising rate environment.
But that the markets were going down before the Russia-Ukraine.
No, well, I'm just saying, you had a rising rate environment. You had inflation running rampant. You had the Ukraine-Russia war. It was a perfect storm. It was an absolute perfect storm. This is not that setup right now. We have the exact opposite setup. And how many companies actually have crypto on the balance sheet? And how many companies actually make money from crypto? A handful? I mean, I don't know. JP Morgan doesn't really have anything to do with crypto. The big banks really don't. It's Coinbase, it's Robinhood. BlackRock has the ETF segment through iShares and whatnot. But a lot of these public companies, I don't think that they're as impacted by crypto. And I mean, look, I want crypto to do good, but to me, it's a much far out story that I'd rather focus on what the largest companies are doing, what their revenue and earnings are, what their projections are. And I think silver breaking 100 is more important right now, because if there really is a structural deficit, you could see inflation come back to some degree, because if silver keeps going up and now you start getting copper to go up, you could get inflation to come back because input costs are going to go up. It doesn't matter if oil is at 55 or 60. And to me, that's more important than if Bitcoin's at 85 or 95,000. Bitcoin doesn't matter for the overall economic economy. Yeah, that's a good point. So what about we think we're going to get a government shutdown?
I think it'll just be some like what we did actually in the past couple months. I think there's so many other things going on that my hope would be that they just let it go through and they don't actually shut down the government again.
Well,
I think they made a lot of progress the last time they shut it down.
Ethereum just broke 2,800. It's at 27.99. Down 149.45. Matt is probably right about crypto winter. This is not looking good. Bitcoin down 86.4. We'll say. Is a strike with Iran imminent? I have no idea.
Yeah, I have no idea.
I have no idea. As far as a government shutdown, I hope that cooler heads prevail. I do not want a government shutdown to happen. We don't want anybody working and not getting paid. So that would be the worst thing that can happen right now.
Hi, Lena. I think that there was a lot. I mean, I think that there was a lot of turmoil that happened this last government shutdown. I think a lot got solved too. So.
Yeah, we'll see. I don't think we're going to get a government shutdown, but we'll see.
Appreciate everyone being here. What did John Conley ask Matt? What? Let me see. John, if you could just repeat your question, I can't see it. Yeah, see if there's. I appreciate everyone being here, man. I'm always, especially with the playoffs going on.
I don't have a team to root for, so it doesn't matter.
What do you mean, Steve? Team didn't make it.
The Jets and Giants play in Jersey. Okay, they're not New York teams.
How do you really feel?
And well, do you see the Devils calling themselves the New York Devils? Just saying. And then Buffalo's so far away, might as well be part of Canada.
I mean, give us Greenland. You guys can take Buffalo.
I mean,
different countries, but and different owners, but.
Oh, it looks like Lena's ready.
Weed and snacks, Jesus Christ. Are those for the? All right, serious question in the chat. For Snowpocalypse 2026, Northeast US, South US, Midwest, what was the number one snack that you had to make sure that you went to the store and get? Steve, let's start with you.
I didn't get any snacks. I have a chicken parm waiting for me though.
Oh, where from? Homemade?
No, I went to a market on Friday that's really good and picked a few things up.
Sunscreen. Camels. Some people, you gotta have your smokes.
I mean, only if they're Turkish golds. Only if they're Turkish golds.
Milk. Some people are saying milk. Diddy's baby oil. Paxie's donuts. That sounds pretty good. Rotisserie chicken, barbecue chips, peanut M&Ms. Crock pot recipes for beef.
So Matt, I am starting a new position this week.
Let me think.
Starting a new position this week.
Next decade.
No.
Will you give me a hint as to what sector, industry?
Technology, communications, AI.
Zeta.
That's right.
I thought you had already bought some.
No, I got cash secure puts on it.
Well,
I'm starting a position this week. I think it's the future.
the future, huh? When you say position, I mean, I'm not trying to be mean when I say this, but Stevie Boy has quite a few positions. When we say a position, is this going to be like a large entry position? What are you potentially selling out of to make this? I know you have cash on hand, but are you going to trim something else to focus? Or is it just a baby position that you hold?
Well, let's just say it's not going to be one share. It's not going to be 100 shares. It's not going to be 500 shares. It may not even be 1,000 shares.
So 2 shares. Just kidding.
It's going to be 1,000 plus shares.
Okay. So a bigger position in the portfolio.
Starting a position. I think it's the future. And if it goes, so I'm going to buy, I have a number in mind of shares that I want. And I'm going to start a position hoping that it goes down a little bit to buy more. But I think that this can fly after this earnings. I never buy everything at once in case I don't time it right, because I know I can't time shit. So I am going to start the position off, and then look, if it falls to 15, I'm just going to dollar cost average my way in. Same thing I did with QXO. When I bought QXO, I bought it 1840, 1850. It went down to 16 or so, and I was able to get my average down to around 17. And hopefully, I can do the same thing with Zeta.
I like that, Steve. I mean, I've not done nearly as much as you, Amit, but from what I have seen, and the not only just like the potential, but the actual financials today, comparatively, and the growth rate that it's seen, I think it's, I don't want to say it's dirt cheap, but I think it's worth it. So if they're able to persist and continue, my problem is I don't know what the long-term vision is, right? Like I don't know what the terminal value. If I had a terminal idea as to like what the long-term vision is it going to be a $1 trillion company? Is it going to be a $2 trillion? If I had that sort of like thing that I can grasp onto to be like, is this something I just want to buy calls on? Is this something I just want to buy?
I got something that'll help you.
Help me, Steve.
The market cap is $5 billion. I've seen way stupider companies go to 20, 30, 40 billion. Way stupider.
Are you calling out RKLB right now, Steven?
I'm not calling out RKLB.
Did I hear you whisper RKLB?
I was actually thinking about Oklo.
I think I heard you whisper RKLB under your breath.
I did not. I was thinking about Oklo actually, but what I'm saying is I would not be surprised if this company is a $15 or $20 billion company in a year or two. Because at the end of the day, the market seems to not think that $15 or $20 billion is a lot of money anymore. And
they don't, no.
When you look at their growth rate, when you look at what they're doing, the balance sheet is great. There's no leverage really. And they have really good growth. And the latest acquisition is very strong. So
Dude, Zeta Force hats?
That's not a bad idea.
Dude, I have a buddy. If you want to get that set up,
Zeta
you
Force
need
hats and shirts.
dude. Zeta Force.
But I mean, here's the thing: would anybody think that it's crazy if Zeta goes to 30 or 35? I don't think anybody would think that's crazy.
I'm surprised it's not more already, actually.
Same here. I mean, at 21, I think it's pretty interesting here. And look, what happens if it goes down? All right, it goes down to 15, right? I mean, I don't think it's going lower than that. I think a bottom is 14, 15 if it goes down.
They're what, 250 EBITDA, right?
I'll tell you right now.
It was like 200 or 250. I'm trying to remember. I mean, we look at so many companies. I'm surprised.
They're doing 1.22 billion in revenue, and their EBITDA is 54.5 million.
Oh, okay. Never mind. I'm way off.
But once again, this is Palantir-esque vibes when you think about what Palantir was in 2020, 2021. Just becoming profitable. I mean, Zeta's at the beginning. This is something you hold for a couple of years. You know, this isn't something that I'm getting in and getting out of. This is something where I want to start a position because I think when I look at the quarterly growth in this, I mean, this is a company where the EBITDA is just starting to scale. I mean, look at this, Matt.
Yeah, Rocket Lab's getting to that place as well.
You know, I have this on a quarterly basis. So March of 23 was negative 40 billion, and then it gradually just gets better. And they finally just got profitable in Q3 2024.
Yeah, that's what made me double down so much on Palantir. I mean, you talk about Palantir vibes. Like, I invested in Palantir in 2020 because it was a $10 billion company, or maybe it was 20. I don't remember, but it was 10-20. And I was like, this could be a $200 billion company, right? And so I invested in what the potential vision of it was. Then when it came into actually the financials showing up in 2021, 22, I was like, dude, this is going to eventually be profitable. And once they're profitable, they're just going to print money. And so, yeah, I mean, I think that there's a lot to be said about companies that are entering this area of like just getting to profitability, like SoFi was a couple years back. I think Rocket Lab's going to be entering that into the latter half of 26, early 27, where they're not focused primarily on building the infrastructure of the company, but actually delivering. Who else is like that right now? There's a couple other companies that are just getting after themselves that are like been burning cash and they're actually starting to get to EBITDA positive and eventually net income positive. And it's a lot of fun to watch.
Yeah, and once again, this is something where at this rate, I wouldn't be surprised if this goes to 30 sometime soon. I wouldn't be surprised if it goes to 18. But
these guys aren't diluting the crap out of people, right? They've been keeping it rather flat, if I remember.
I mean, here's the crazy part. Look at the balance sheet. You got 385 million in cash. On long-term debt, 196 million. So cash to debt, positive, no leverage. Capital leases are relatively nothing. So legitimately, net debt positive. You go into total shares outstanding, not really diluting. Yeah, 240 million shares outstanding, that's nothing.
It's not bad.
The unit of economics on this is interesting.
I wish you the best, my man. I don't think it's a bad one.
I mean, in all seriousness, is this something where, I don't know, do you scale to get 10,000 shares of this? I don't know.
But I mean, what's the goal with this? To just get a 4 or 5x and get out? Or is it like a pivotal, like, is it like a Palantir where you don't plan on selling it until something changes.
How about this? I think a lot of people, and look, this is also going to be sentiment and me trying to handicap momentum. I think a lot of people are looking for the next Palantir and the next Robinhood because those are not the next companies to invest in. They're expensive. How many companies can you really buy in the $15 to $30 range that has potential to be a multi-bagger? There's not many options out there with great fundamentals. And I'm not convinced that SoFi is going to be able to do what Robinhood did. But I do think if Zeta keeps growing like this, they have the potential to be a multi-bagger from here. And I think people will try to handicap things for a catch-up trade on AI. Zeta just did a partnership with OpenAI for OpenAI's models and its product. It is an advanced marketing platform that does a lot of different things for the customer to generate the numbers that their CEO is saying. For every dollar spent, the customer gets back 6 in revenue. So it's very interesting. And this is something that could be in the future a multi-bagger. So I think I want to scale into this and get to the point where this becomes a big growth holding.
I like it. I don't hate it. I'm curious what your thoughts are on Skywater.
I think I looked at it the other day and I didn't like it. Hold on, I'll look at it now. I mean, keep in mind, I don't know anything about them, so I'm not the right.
Yeah, I trust you're on my board of directors, and I trust your thought.
On a quarterly,
I know from a financial perspective, you're not going to like it.
So we'll change on an annual basis. Revenue 346, gross profit 80. So I mean, right there, gross profit margin is not a lot. You know that. But gross profit is growing with revenue. The first question is, and not knowing anything about the company, why the hell has revenue gone up fucking $4 million over the past year? That's the first question.
It's a good question, Steve.
Now, I have no idea, right? Cost of goods came down. So, okay, great. Gross profit's up. But I mean, what was that, 20% margin or so? Not great. Not that expensive to run the company, but it pretty much takes up all the gross. So from the numbers, I don't necessarily like it. The only reason they're profitable is because of whatever the hell the 100 million in unusual items that they got. I'm going to assume it's some type of incentive for moving an office somewhere, or some incentive to build something somewhere, factory or something. But that's a one-time thing. EBITDA, not a great margin, but growing, so that's good. I mean, balance sheet, not a lot of cash on hand. How much debt do they have? No debt, so they're not levered, so that's good. I like that there's really no shares outstanding, which I don't know how that's even freaking possible. What's the market cap on this? Market cap is 1.52 billion. How that math's not mathing. 1.52 billion at 31 a share. This has to be wrong on the amount of shares.
So let me see.
They're saying there's 48 million shares. That does not make sense.
Yeah, it does.
Am I just not carrying a zero?
48 times 30.
Maybe I'm not carrying a zero in my mind.
I don't think you're carrying a zero in your mind.
Maybe I'm not. Stock-based compensation, they're not egregious, so that's fine. Negative free cash flow. Let's see what the analysts think. Not making money the next 2 years.
No bueno, Steve.
So here's the thing. How are they expecting 40% revenue growth next year, but they're still not going to make money? How?
That an acquisition.
Did they? Okay.
Yeah.
I don't know. Like I said, I don't know enough about it, but the numbers are not compelling to me.
I get it. You like to look at things based off numbers. That's the reason why you never invested in a rocket lab.
Yeah, I mean, and it's to my own fault. I mean, I look at the numbers too much, and that's why I don't like Tesla right now. I like Meta because the numbers tell a big story. I think that we're going to be in a position where high beta is going to fall out of favor, and I'd rather be. Look, I do think Zeta can do something good. Not saying Skywater can't, but if I had to pick between the two, I think Zeta's numbers and growth are more interesting to me.
I would agree. I think in terms of risk to reward, I would say Zeta is probably more likely to succeed. But in terms of if Skywater does eventually get some of the government contracts that aren't in those numbers, I would anticipate that that Skywater ends up being a potentially $15 billion company, and that's a 10x, maybe even more. It could be greater. I mean, it really just depends upon how much the government needs to use them for things like Golden Dome and many other things. So maybe not. Maybe it just stays where it's at, and maybe it's dead money for 3, 4, 5 years. But if Golden Dome ends up being as big and as important, and you need more radio, or what are they called? Radioactive hardware resistant semiconductors, then your go-to is Skywater. So I don't know. We'll see.
Yeah, we'll see. I hope
the numbers don't look. You're right. The numbers don't look great. That's not the reason why I bought it. I mean, I bought it because it's not hemorrhaging cash, and I bought it because it looks to have a monopoly on certain types of semiconductors that I think the world is going to need more so. And you can't rely on Taiwan or other countries to potentially rely on, especially if you're going to be onshoring semiconductors to the United States more.
I'm with you. I'll look more into it.
It's more story based. It's more story based than numbers based at the moment.
All right. So Matt, your favorite company, somebody wants to hear your opinion on the value of Rocket Lab.
Who?
Pedro Silva.
I mean, once again, it really just depends on what and why you're buying it. I mean, if you're buying it because you think it's going to go to 120 this year, I would suggest that it's probably not a good reason. If you're entering because you think it could actually be a true contender in space constellations, they can help deploy semiconductors into space, data centers in space, solar energy in space, Mars transport orbiters, stuff like that, and you think it could be a multi-$100 billion company, then that's more of a reason to potentially buy into it. And I can't. The story is somewhat uncertain at the moment as to what their constellation will actually be and what value they'll be able to get for that constellation. But I'm cautiously optimistic it will do well, just knowing the execution ability and the ingenuity that Sir Peter Beck has. In terms of, do I think it's a good value now? No, of course it's going to be overvalued. You're looking at potential that's 5-10 years down the road to value it at about a $50 billion market cap, $40 billion market cap today. The place that I think people get lost on is like, oh, well, it can drop, by 80%. It's like, well, an 80% drop would mean it's about a $5 to $10 billion company. The way I look at this is it takes way more than $5 to $10 billion to build a company like Rocket Lab right now. So there's that. And even if you had $10 to $15 billion, you need not just $10 to $15 billion, but you need execution ability. So there's been plenty of companies that have spent billions upon billions of dollars to try to get to the place that Rocket Lab is at, and they failed miserably. You've had dude, it's so funny when people are like, Matt, do you own Next Decade? Do you own Venture Global? It's like,
Well, Matt, before you go on, are you ready?
yeah.
Philosophical investor strikes again.
Does he? Please. Worthwhile. Anytime that
He won the battle, but who is going to win the winter war?
So I'm upset, Steve, because you heard me like
I heard you all right. I heard you.
What did I say before we started the
You
stream?
were cursing Gemini out.
Apparently Steve or I am too famous for Gemini to make fucking. So how philosophical investor is able to get? I literally put the same picture that I put of me and the same picture of Steve in there, and for some reason the past 24 hours, maybe even longer, this started yesterday. It keeps saying that one of us is too famous, pretty much, and they can't take photos of famous people and put them into thumbnails. So I need to change up the thumbnail I'm using, or the photo that I'm using for Steve, or I need to take a different picture of me. But anyway, back to Rocket Lab. So, I mean, if you just think of where they're at, they produce the number one space grade solar panels in the world, the same ones that are used on the James Webb Telescope, the same ones that are powering NASA missions that are going to Jupiter. If you think about what other accomplishments they've had, Firefly landed the lunar lander on the moon, but they used the telemetry software from Rocket Lab and many other subcontracted out parts from Rocket Lab. So without Rocket Lab, Firefly, while impressive, they may not have landed on the moon. I'd be curious to see if they did without Rocket Lab. They have a hypersonic missile. Sorry, not hypersonic missile, a hypersonic rocket that is hopefully going to be used for defense and not offensive purposes, but defensive purposes. So thinking Golden Dome contracts, thinking that the other Space Development Agency contracts. I mean, to me, that is a long list of accomplishments and execution that would value the company way north of $10 to $15 billion. And so if you think about it, to me, is the valuation of the the valuation of Rocket Lab overpriced right now? Probably you could say so, but if you're looking 5 to 10 years out, the Falcon 9 is going to be retired eventually. That's not just me speculating. That's just based off of what Elon Musk himself has said. And if you look at Starlink has been a phenomenal moneymaker for SpaceX, but the version 3 of Starlink models can't fly on the Falcon 9. And so when you look at V2 has been the massive profit generator for SpaceX. But as they transition from V2 to V3, they need the Starship to be able to launch those satellites. And so 70% of all the launches for Falcon 9 have been for the V2 over the past several years, have been for the V2 Starlink satellites. So now you have 70% potentially over the next coming years immediately disappearing of the Falcon 9 launches. So if you then think and rely upon strictly commercial clients, well, are commercial clients going to need only Falcon 9? Well, Falcon 9 has higher lift capacity. It's 22 tons versus, say, the Rocket Lab's Neutron of 15 tons. But if you take into consideration the entry costs, generally speaking, it's $70 to $80 million for a Falcon 9. It's going to be approximately 50 to 55 million for a Neutron. Guess how much, Steve? I'm curious on your thoughts of that 22,000 kilograms. Yeah. People actually use on a commercial launch. I'm curious on your thoughts.
I have no idea. I know nothing.
Would you say 100% use of the capacity, 50%, 25%?
25%.
It is based off of studies. 15, 16% on average.
That's good.
I mean, I wouldn't say it's good. It's a lot of rocket that's left unused. So, I mean, if you think about it, when you talk about a price point, if you say are starting at a 3,500 pound um, satellite that needs to go up into space, you don't need 22 tons. You could use 15 and still get the same opportunity. So in that case, which one are you going to pay for? You're going to pay for the $55 million rocket or the $75 to $80 million rocket? And I think you're likely going to use the $55 million rocket. And if they're both reusable, then from a carbon footprint standpoint, there's that piece. So not only that, but you also have the thought process behind. I mean, I could go forever. You have the thought process behind only having currently one contractor that will put people into the space station, which is SpaceX. Boeing is bowing out, and I don't think they're going to continue the Starliner suite. They might in the short term, but I think in the long term, they're going to bow out. They're not making money from the United Launch Alliance like they were hoping, and it's just a costly venture, and I don't think it's important enough for them to continue after spending billions of dollars and probably not ever going to make a profit on that particular venture. That might potentially go to Neutron. Neutron is human lift capable. The design is being certified specifically for that. So if you start thinking, it's not $50 million to launch at that point. When you start launching people into space for going to the space station, you're talking about 50 to 75 million per person. Generally, we send 3 to 4 people, and you have to certify that. So that alone, if you do one of those launches, is going to be about $300 to $400 million per launch, which is 8 times increase compared to the normal Neutron launch capacity. So you start to think that there's a lot of avenues of being number 2 in the space actually has, and a lot of countries even don't necessarily want to do business with Elon Musk, right? I think a lot of European countries dislike Elon Musk, and so when it comes to the European Space Agency,
Matt,
they'd
that's
rather.
a good point that I never thought of. That Elon is that hated by some that if there's a need for those services, Rocket Lab would win by default. I never thought of it like that.
Yeah, and so you start to think other pieces like you have a Kiwi who's a New Zealander who's kind of not necessarily U.S. While it's a U.S. based company, being Rocket Lab, he's a Kiwi, right? So if you now have access to launching things for Japan, which Japan has been one of Rocket Lab's biggest customers, Korea, Australia, a lot of alliances associated with the Australia, US, and UK associated with hypersonic test beds, not missiles, but test beds in general to be able to help with defense. So the UK now has employed Rocket Lab's hypersonic test beds to be able to understand how they can utilize it for defense and things like that. And that I assume will eventually follow on with Australia because there's some Australian clients as well. So there's a lot going on. And to give people some idea around the space, and I'll stop here. The previous hypersonic test bed was, I think, called the Minotaur 4. That was a Lockheed Martin product, and it was very intermittent launch capacity. And it cost about $50 to $55 million per launch to be able to test. Well, HASTE, which is the hypersonic test electron that Rocket Lab has kind of retrofitted their Electron rocket for, is about anywhere between the normal sales price of an Electron is like 8.5 right now, going on $9 million. But the HASTE, because of the intense security aspect of it and additional testing, etc., even though it's not going to space per se, is like $10-11 million. So you're dropping the cost of your hypersonic testing by about 80% by going with Rocket Lab. And so there's very few other companies that are really in the realm of that. And if you think about it, you're not talking about specifically just going to space. You have the solar aspect of things. You have the reaction wheels, which we're like 90% certain at this point that the reaction wheels that the Amazon Leo, or previously known as Kuiper, is being utilizing the Rocket Lab's reaction wheels, which help kind of orient the satellite in space. So there's just a lot that you could say, right? Even if it's not launch, you think about it, the majority of other space components that go into space have a Rocket Lab logo on it. I think it's like something in the past couple of years, it was like over 40%. I wouldn't be surprised if it increases to 50, 60% of everything that's put into space has some Rocket Lab logo somewhere on it. So when you think about end to end, it's pretty impressive, and they're going to succeed, in my opinion. And within the next 12 months, I anticipate them being EBITDA positive. And then within 18 months, I anticipate they'll have their first net income, GAAP profitable quarter. So sometime, I think, in the first half of 2027. And once that happens, I mean, it's literally just 4 quarters away before it gets entered in the S&P 500. I wouldn't be surprised by 2028, maybe even late 2027. You could see it in the S&P 500, and think about all the catalysts associated with the stock there. So yeah, I mean, like I said, I could go on and on. I mean, is it expensive here? You're talking about for the next 6 months to a year. Of course, it could drop by 50%. It did actually just in December. But if you're talking about 5-10 years down the road, I could see this company 4 or 5xing easily, or maybe not even that, maybe even more, maybe going up another 8x from here in the next 10 years.
I mean, that would be amazing if it did.
Well, you guys probably won't hear from me ever again. No, I'm just kidding.
I mean, wouldn't be surprised.
I'd start banning more people in the chat. I'll say that.
Wouldn't be surprised, Matt. Rocket Lab to 1,000, as Charles says.
I mean, that's the thing, is people are like, when are you going to sell? I'm like, well, eventually they're going to pay a dividend. Eventually they're going to buy back stock. Why would I sell?
They can buy back your stock. No.
I'm not selling.
Not selling. Look at you. Not selling.
Why would I sell?
Even if your Peter Beck comes knocking, you're not selling. I like it.
If Peter says, Matt, we can donate some of your stock to go to Uranus or Pluto or Jupiter or something, then I'd be like, sure.
Okay. All right. All right.
Ban that James Burns guy. Ban him. I'll ban him myself.
Naz, I have been thinking about VG. I do own it. I don't own enough. I have no idea what's going to happen. Just trying to get through this week right now.
Steve's just trying to get his Zeta. He doesn't give a shit about VG.
I'm just trying to get through this week right now. Hey, Matt, anything else you want to discuss on the Sunday afternoon small account challenge?
See, we got other people on the Rocket Lab train. We'll see. Take your profits. I'm not saying don't sell. If it really means a lot to you, but I'm willing to play the game of Monopoly. So, and I don't have kids. So if you have kids,
do you know what the best strategy in Monopoly is, Matt?
To just keep buying.
Okay. Do you know what the second best strategy is then?
Keep going around the go button, collecting $200?
No. Not to build hotels.
What does that mean? How does that relate to the stock market, Steve?
No, I'm just saying the best strategy in the game of Monopoly is not to build hotels.
Just the single family houses. 4
single family houses on each. Do you want to know why?
Make it affordable? I don't know.
No, because then you monopolize and I have a theory that that's why it's called Monopoly, because you monopolize those houses because there's only so many in the box. And then when you go to a hotel, what happens? You put those four houses back in the bin, right? If you hoard them, nobody else can build them.
I like it, Steve.
Just saying.
I like it. But no, I mean, one other question, because I'm sure you have a lot of people in your audience that may have not heard of this one. People always ask next VG, which one? It really just depends on your risk tolerance. So I'm cautiously confident that we'll see potentially first gas enter the facility of Next by the end of the year. But at the moment, until that sort of happens, and first gas doesn't mean revenue, right? First gas means they're testing and commissioning the facility. I wouldn't be surprised if you don't start to see any sort of revenue between 6 months after that until middle of 2027, maybe third quarter of 2027. So there's verbiage on the street that they're ahead of schedule, and trains 1 and 2 are going to be able to start commissioning here within the next 12 months. And if that's the case, then they're going to get a step closer towards profitability. I think you'll see a slight stock bump when first gas enters the facility, because that means, things are working, or at least they're trying to get them working, and eventually you're going to have some revenue coming through. So I think you'll see some sort of bump in the stock associated with that. But that being stated, the company's still running at a massive loss in terms of operating expenses, because they don't have any revenue coming through to offset it. So, that being stated, it's much cheaper than a lot of these companies, right? It's less than $2 billion market cap. And so you have to think in the long term, where do you think the company's going to end up in terms of long-term value? Next decade could, that Rio Grande facility could end up being a 60 MTPA facility, which is some of the largest facilities in the world. But not all of it's going to be owned by next decade, right? With partnerships with Total and Mubadala and many other companies that are equity owners, even Saudi Aramco to an extent, that they won't own 100% of that 60 MTPA. So you have to understand what the equity position for them would look like. So keep that in mind. But I'm cautiously optimistic that the company could be worth over $20 billion one day. So if you're putting in money today, assuming no dilution, it could be a 10x. But I always would incorporate some sort of dilution potentially associated with that, just because it's very capital intensive to get these facilities online, and it's going to take a long time before it's a 60 MTPA facility. So you have to be in it for the long haul. Venture Global, on the other hand, is producing gas today and is actually a very profitable company. Makes about, assuming they're going to close out the year, about $6.3 billion in EBITDA. The company, until rather recently, was below $20 billion. So you were buying it at a price to EBITDA of less than 3. Now you are potentially buying it at less than 4. I don't think it's popped up more than $25 billion market cap. But going back into where you think the terminal value of the company could be, well, the company's already profitable, so bankruptcy is very unlikely at this point. And in fact, the debt, kind of things that we were talking about for Verizon earlier, the debt is likely to be, because as they climb investment grade, the points that you have to pay in terms of interest rate can go down. So the net income of those will be better and better over time, assuming that things kind of hang in there. A lot of the value of the company is baked in already in terms of the or not baked in, but the certainty of the revenues are kind of baked in because of the contracts that they have. So a lot of those are take or pay contracts, like 15, 20-year contracts that are set up with Japan, with Europe, etc. So a lot of those are kind of set in stone. Then they have excess capacity, which is why the value continues to flux. So depending on what Henry Hub cost is, depending on what Japan marker, JKM, or TTF, which is the European marker for their gas, ends up being, it could fluctuate very heavily associated with that. So what do people think the spread is on that for spot pricing, where they can make a lot of money very quickly? So that being stated, the third facility is, the second facility, phase 2, is about to continue to ramp up here. It's performing way better than expected for the second facility in terms of capacity generation, or not capacity generation, but just overall generation above the nameplate. The third facility, I anticipate, will start to be tested probably towards the end of this year, and start actually commissioning cargoes on the third facility, probably the first half of 2027, and that's going to be their largest facility. So in that respect, if you're looking at that, it's already a $20-25 billion company. Maybe it goes to $100 billion. I'm cautiously confident that it'll go to $100 billion market cap. That's a 4x unless they have some sort of buybacks. But you're buying back $2.5 billion worth of shares. There's a lot of shares outstanding, so one share, isn't going to take a large chunk out of the company. But it already pays a dividend because it is profitable, like I stated. So there's that piece. So it really just depends. You have a 4x there potentially with potential buybacks to potentially increase that. Or you have next decade, which if they don't dilute could be a 10x, maybe even 15x. But if they dilute, obviously the value of that is going to go down. And you're also coming from a smaller share base as well on next decade. So buybacks might be more meaningful if they were to buy back a single share or so. So I think about 1/5 the amount of shares in next decade as you do in Venture Global. I think Venture Global is about 2.5 billion shares outstanding. I think next decade it's like 500 million shares outstanding. So once again, that really all just depends on your want of risk tolerance, right? Slow and steady wins the race, kind of like what Steve was talking about with Zeta, right? Very profitable company at this point, or will be net income gap profitable here within the next couple of quarters, if not this quarter. And then you kind of have a lot of cash on hand to be able to move from. Or do you want to buy something like a next decade, which still has some running room to go, but has line of sight, is a little bit further away. So, that I can't make that decision for you, right? What is your risk tolerance? What do you feel like is better for you? Would you rather have a bird in the hand or two in the bush and potentially get twice as much? I mean, it really just depends on your risk tolerance and your portfolio strategy. So, sorry, Steve, just wanted to get that off the chest because people ask all the time.
No, that's fine. So I think at this point we're going to call it. Thank you, everybody, for being on here with us. We'll be back during the week at some point, definitely back next weekend. And hopefully everybody stays warm. Hopefully the snow stops soon enough. We'll see what happens. I'll probably be back later tonight, setting up the second camera and doing a little silver and commodity show and maybe go through some of these roles. And really appreciate everybody being here. Please go follow Matt, and we will talk to you later. Enjoy the rest.
Yeah, just want to say, really appreciate 160 people on my stream. So it continues to get more and more, and I think a lot of that is due to Steve getting me out of my shell and streaming more. So just really appreciate the 160 of you guys watching on my stream. It means a lot.
I gotta tell you, the philosophical investor is hilarious, by the way. Anyway,
he thinks he's better than us, Steve.
Oh, by the way,
he is better than us.
I didn't know until last night that Chels has her own YouTube. So please go check out Chels's channel.
Put that in the chat. So Hollywood, Steve.
So Hollywood. So, all right, everyone. Really appreciate you being here. Thank you for now. Follow Matt. Go check out Chels's channel. If anybody else has a YouTube channel, let us know. We'll link it. And we will see everybody later. Have a great day.
Cool. Bye-bye.